Assalamu alaikum. You are new video for trading. Please new video and full watch.
All right, let's talk about something you've probably seen all over your social media feed. You know the posts, right? Someone staring at these super complicated charts on their laptop, and the caption is always something like, just another profitable day in the markets. It looks pretty cool, pretty glamorous, but it definitely makes you wonder, is it really that easy? I mean, can anyone just jump in and start printing money? Is this some secret club for the super rich? Or can a regular person, a beginner, actually figure this all out? Well, that's exactly what we're going to break down today. So here's the game plan. We're going to cut through all that hype. We'll look at the digital marketplace and figure out what trading style might fit you. Then, and this is huge, we'll talk about the mindset challenge, the 5 biggest traps for beginners, and finally, how you can take your very first smart steps. All right, first things first, we have got to separate the social media fantasy from the actual market reality. You see, the hype is all about getting rich quick, but real, sustainable success, that starts with building a solid foundation. So, let's start building that right now. So, what is trading? Anyway, what are we even talking about? And where does all this happen? Let's dive right into the basics. Okay, so at its very core, trading is, well, it's ancient. Seriously, it's not some newfangled internet thing. Think about it. For centuries, people have traded gold, or grain, or spices. We're doing the exact same thing today, just digitally. The goal has never changed. Buy low, sell high. That's the whole game. Let me break it down with a super simple example. Let's say you buy one share of a company, and for that one share you pay 100 rupees. Easy enough, right? Okay, now imagine the company does something great, and the price of that share shoots up to 120 rupees. If you sell it, boom, you just made a 20 rupee profit. Simple. But, and this is the part they don't always show you on Instagram, what if the price goes the other way? What if it drops to 80 rupees? Well, if you sell then, that's a 20 rupee loss. And this is the key. Trading isn't just a money-making machine. It's about managing the very real risk of losing. And today, this whole buy low, sell high thing happens with all sorts of digital stuff. Of course, you've got your classic company shares or stocks, but people are also trading crypto, like Bitcoin, foreign currencies in what's called the Forex market, and even commodities like gold and oil, all from their computers. So where does this all happen for company shares? It's called the stock market. Just think of it like a giant digital marketplace. You've probably heard of the big ones, like the New York Stock Exchange or the NASDAQ. Here in India, we have the BSE and NSE. It's basically the meeting point where millions of buyers and sellers all agree on what a company's share is worth at any given second. Okay, so we get what trading is. But how do you do it? Well, there's no single answer. It's not a one-size-fits-all kind of deal. Different approaches work for different people, for different goals. Let's call them trading styles. And check this out. This really lays out the main flavors. You've got intraday trading, which is super fast-paced. You're in and out in the same day. It's basically a full-time job and pretty high risk. Then there's swing trading, which is a bit more relaxed. You might hold on for a few days or weeks, trying to ride a trend. Scalping? Whoa, that's for the pros. We're talking trades that last minutes, even seconds. Super high risk. And then, on the complete other end of the spectrum, you have investing. That's the long game, holding for years to build wealth over time. We can talk about strategies and charts all day long, but honestly, none of it matters if you don't get this next part right. Ask any professional trader. and they'll tell you that trading is like 90% psychology. It's all about what's going on right between your ears. It's a mind game. And in this mind game, you have two main villains, fear and greed. Fear is that little voice that screams at you to sell everything the second the market dips. That's panic selling. And greed? Greed is the voice that tells you to dump all your money into something that's soaring, usually right before it's about to crash. These two emotions, they are responsible for almost every bad decision a trader makes. So, how do you fight them? Well, this is the difference between a pro and an amateur. Professionals don't trade based on feelings. They trade based on a plan. They have a system, and they stick to it no matter what. They use tools like a stop loss. It's like an automatic eject button that sells for you if a trade goes bad, limiting your losses. They trade with pure logic. And get this, their number one job isn't making money. It's protecting the money they have. Profit is always second. Because those emotions, fear and greed, are so powerful, it's really easy for beginners to fall into some pretty common traps. So let's go over the 5 biggest mistakes that can absolutely wipe out a new trader's account. Just knowing what they are is half the battle. Okay, here are the big 5. Number 1, trying to get rich quick. That just leads to stupid risks. 2, trading with real cash before you have any idea what you're doing. 3, blindly following tips you see in some social media group. Big no-no. 4, revenge trading. That's when you lose money and then immediately jump back in, angry, trying to win it back. Never works. And 5, overtrading. Just making too many trades too often. You got to remember, the market is always going to be there tomorrow. Your money? Maybe not.
All right, I know we've talked about a lot of risks and mistakes, but look, the goal here isn't to scare you off. It's to prepare you. So let's switch gears and finish up with a safe, practical blueprint for how you can actually get started on the right foot.
Here it is, your 5-step starting plan. Step 1, learn the basics. Seriously, give yourself at least 6 months of just learning before you even think about using real money. Step 2, practice on the demo account. It's like a flight simulator for trading. You use fake money, but in the real market. It is absolutely essential. Step 3, when you're ready, start small. And I mean small. Only trade with money you can genuinely afford to lose. Step 4, choose one simple strategy. Don't try to do everything at once. And finally, step 5, keep a trading journal. Write down every single trade, what you did, why you did it, and what happened. It's the best way to learn from your wins and your losses.
So look, if there's just one thing you remember from all of this, let it be this. The market isn't a lottery ticket. It's a skill, a serious profession. It doesn't reward the gamblers and the thrill seekers. It rewards the people who are consistent, who are disciplined, and who make managing risk their top priority. It's a skill you have to learn.
Which brings us to the final question, and this one's for you. After all this, will you choose blind trading or smart trading? You can chase the hype and hope for the best, or you can commit to actually learning the skill. And honestly, the path you pick, well, that's going to make all the difference.
Subscribe your channel and next video inshallah.